Welcome back, and looking at our business news of the day now, the UAE has attracted over $75 billion in foreign direct investment since its establishment 4 decades ago, according to official data. According to a local daily, the amount has positioned the Emirates as the #2 capital recipient, behind Saudi Arabia, nearly 26% of the combined foreign capital received by the GCC. Together, both Saudi and the UAE accounted for around 80% of total foreign capital for the region, of nearly $278 billion received by the GCC. Additionally, figures by the UN Conference on Trade and Development showed the country has pumped over $57 billion into foreign markets over the past 2 decades and has emerged as the largest capital exporter in the region and the 30th top investment in the world. Since its establishment 4 decades ago, the Abu Dhabi Fund for Development has provided loans and grants to 323 development projects in 58 developing countries at a total value of 29 billion dirhams. According to news agency WAM, loans and assistance offered by the ADFD and the Abu Dhabi government for this year stood at 393 million dirhams. The fund finances development projects to support efforts to achieve economic and social development in developing countries. The ADFD also makes investments in order to encourage the private sector in the recipient countries to play an essential role in accelerating the economic development process. The fund has given special attention to the development of the main sectors and infrastructure in developing countries, such as agriculture, industry, transportation, water and electricity. The Middle East is seeing a huge rise in demand for British butlers, according to reports. According to a local daily, London's bespoke bureau British Butler and Housekeeper Academy has placed 430 butlers around the world this year, with a 100% rise from last year. Experts were quoted as saying that the demand from the Middle East is at around the same ratio for the niche market. Additionally, luxury hotels in the region have shown interest for their staff to be British butler trained, and demand for British nannies has also seen a hike. They added that butlers who are placed overseas can earn as much as £100,000 a year. The local markets are closed for UAE National Day holidays, so before we take a look at some of the other top business stories for today, let's first take a look at the GCC markets, followed by the various currencies, the price of oil and commodities. And looking to other news now, strong rallies in risk sentiment have seen the euro break through 130 levels as news filtered that the Eurozone will release up to €34.4 billion in bailout money to Greece by mid-December. Additionally, earlier this morning, a stronger than expected Chinese PMI also helped prospects. Well, we earlier spoke to Gaurav Kashyap, the head of the DGCX trading desk at Al Bahri Middle East, to see if this rally would be temporary in nature.
We have seen markets really rally on improved risk sentiment this Monday's trading session, following optimism emerging from the Eurozone. Now remember, as you had mentioned, the Eurozone had passed about 33 billion euros in bailout money approved for Greece, which will be released in December. But we're kind of suspect with regards to the rally we've seen over the past few days. And the reason for this is we're expecting to see a lot more volatility driving markets as we approach the fiscal cliff and the debt negotiations over across in the US. This should be very supportive of the US dollar, and we're expecting to see a slight reversal with the risk-off trade dominating the week ahead. We did have some developments with regards to the debt ceiling debate over the weekend. Of course, the House Speaker, Republican Boehner, did reject Timothy Geithner's proposals that only the top 2% should be taxed. We will see how developments will continue throughout the week ahead, but we expect these to be very positive for the US dollar, as the risk-off trade will dominate markets in the week ahead. Also, what we'll be watching for, the Australian dollar sold off rather aggressively on Monday's trading session. This is as a result of the quarter basis point cut expected by the Reserve Bank of Australia tomorrow. They're expected to cut their rates from 3.25% to 3%. This is weighing heavily on the Australian dollar. Also, we'll be watching out for Friday's US non-farm payroll number. Now remember, Hurricane Sandy will have an impact on these figures, so the figures expected to come in much weaker than expected at about 80 to 90K. But if we have a reading following in this range, then we're not expecting to see too many surprises as a result of the hurricane.